I'm Owen Bigland. This is the Inside Edge video blog. Happy New Year to all my viewers. We're now into 2019. So I want to do a little special blog here. And this one is kind of the process I go through, because I get a lot of people that email me asking about, how I evaluate or how I set goals, how I track certain things in my life for my investment portfolio, my real estate portfolio, etc. So I've done a few blogs over the years kind of on how I take stock and how I review the year between Christmas and New Year. So just like this year, just like most years, I usually take stock of this between Christmas and New Year's on a warm beach someplace. And this year was no exception. I was in Hawaii over Christmas and New Year's. And I have a binder that I have had for about the last 10 or 12 years. Nothing fancy. But in there, it's a book that I write down certain goals, just certain commentary throughout the year, and then I do a final review on a number of different metrics that I keep in this binder. So I take this binder out to Hawaii or Mexico or wherever I am at the end of the year, grab a Corona from the bar and go sit under a canopy someplace and spend about an hour. That's all it really takes me, is about an hour to kind of do a recap of the year 2018. So I'm going to go through this, and I think I'm hoping some of you will find this interesting and maybe learn a few things on how I think about my investment portfolio and my career and getting better in different ways. So the first thing I always look at when I open my book, and as again, this book I've had for 10 or 12 years, so it's easy for me to go back to 2017, 2016, and at a glance I can kind of see where I was in some of the previous years, just as kind of a summary of where I was in the previous years. So the first thing I always look at is Owen Bigland Realty, MACDONALD Realty. I always look at my career, my business. What kind of year did I have in 2018? And like most years, the main metric I follow there, it's always nice to follow unit sales, or what we call ends, and try and better myself every year. If I sold 30 units last year, let's try and sell 35 units this year. The main metric I look at, though, is revenue earned, income, commissions earned. And that's a very easy one for me to follow, because it's in my face every day when I open up my computer. When I'm doing deals, I have a running tabulation from my brokerage, MACDONALD Realty, on my year-to-date earnings. So it's very easy, and why I don't really write down a lot of my goals, and there's no right or wrong. Some people want to write down their goals, put them on whiteboards and that kind of thing. I've never really done that. I tend to keep it in my head, have a running tabulation of where I am. Plus, as I say, when I turn on my computer in my office here, I've got a running tabulation of where I am for unit sales for the year so far, where I am for income earned. It's sitting on my home screen. But for income earned this year, just like last year and the year before that and the year before that, 2018 was another record-setting year for me. And thank you to all my new clients that I picked up in 2018. I'm looking forward to working with many of you again in 2019 and in the future, as well as my existing client base. But every year, generally, my business gets bigger and bigger. And a lot of that is, I'm purposely doing it that way. I'm using technology, I'm doing more advertising, I'm hiring assistants to help me increase my business. But the other thing is why I'm rarely disappointed with my business aspect and ends done and commissions, is because those are things that I can control. And I've talked about this many times before. I focus on the things that I can control, and getting better at my job, if that means selling more units this year, those are things for the most part that are in my control, and why I'm rarely disappointed in the year that I have in the Owen Bigland Realty business. And just like previous years, I've thankful that I've won some nice awards again for 2018, both from the Vancouver Real Estate Board, which tracks unit sales. So I'm in the higher echelon for the Real Estate Board again. I also received a pretty nice award from MACDONALD Realty as one of the top producers for the company, which is based on commissions earned and sales. So that was nice. So every year I try and get better from a business standpoint, and I'm very rarely ever disappointed with that, because again, I can kind of control and it's within my grasp on what I can do in my business, unlike some other things which I'm going to get to in a minute, which are beyond my control, and you got to take what they give you. Now, real estate, of course, not everything is in my control. Not a year goes by when I don't get some crazy things that's happened. I would say 2018 was up there in one of the more crazier years for me, partially because the market was in a bit of a transition with all the mortgage tightening. I had several deals that collapsed on me like I do every year. I had many deals that almost collapsed that we had to save, usually due to financing issues. We needed to get extensions on subject removals. All kinds of crazy things happened to me. Always lose a little bit of hair every year. It's a stressful job, but for the most part though, my business is something that you can control where you want to be with most of it. It's within my control on how successful you want to be. Next thing I look at is my real estate portfolio. Now, I don't look so much at the value of the units I own. The first thing and the big metric I want to keep an eye on is what is the income that's coming in from my investment properties. What is the income from each unit as far as what the rent checks are coming in and the total, as well as the expenses. And this year, I blogged about it earlier this year, I had a couple of tenancy turnovers. The nice thing with tenancy turnovers, especially in this market with rents going up at a pretty stiff pace over the last 7 or 8 years, is I had some nice rent increases. On one property I had about an 11% increase, and on the other one I had close to 20%. I had blogged about it. The tenant had been there for about 3.5 years, was paying well below market rent. He decided to move out of the Lower Mainland. I put a new tenant in at a substantial rent increase. So that's the big metric that I want to look at. What is the income that my portfolio is producing for me? And I had a nice, because of these 2 rental turnovers and the rent increases I had a nice increase there. Expenses were held pretty stale here. I had a little bit of increase on most of my properties in the maintenance fees. And I've also been getting increases in the insurance lately. That has been going up quite steadily, and some dramatic increases in the insurance rates that I'm paying to insure my units. But overall though, my revenue for 2018 was up a fair bit from 2017, and minus the expenses, the net income to me was better, and that's always what I like to see. The other thing I'll look at is what is the value of my portfolio. Now I kind of have, again, a running dialogue in my head. I know what generally each of my units is approximately worth if I was have to sell it, even though I don't. I rarely sell, as you guys know. But then when I get back from vacation in early January, I always have my BC assessments waiting for me. So I'll open those up, and that'll kind of give you a ballpark idea of what the year was like. So for me, I had some units, especially some of my older wood frame units in places like Richmond, were up substantially. 14, 15, 16% on some of my units. My downtown units are a little bit all over the road. Some of my stuff in Gastown, Crosstown area are up only 2 to 3%. My principal residence, so some of the higher end stuff, was actually down this year about 5%. So it's a bit of all over the road. For the most part though, most of my units are assessed a little bit higher this year than they were last year, but not too much. Probably on average 3-4% if I had to total them all up, which is to be expected. For the last 6 or 7 years, I've seen some pretty big assessed value, or the assessed values go up quite a bit. It's only a matter of time before we're going to get a down year here and you get a few property assessments that are lower than the previous year. You have to expect that. I've owned real estate in Vancouver for almost 35 years now. For the most part, I would say 70% of the time my assessed values are up during the calendar year. But 3 out of 10 times you'll get a down year where it's flat or it's down, and it's to be expected. Markets don't go up forever. One of these days I'm going to start seeing the price on these downtown condos. Maybe it's going to be 2019 that the assessed value might go down a little bit. We'll see. Next thing I move on to is my stock portfolio, my investment portfolio, which is beginning to get a very large portion. If you've read my book, I've got a fairly substantial stock portfolio. I've been investing in good dividend paying stocks and equities, both in the US and Canada, and ETFs for all close to 30 years, or probably over 30 years now. So this year, The first thing I look at, though, I don't look at the value of my portfolio yet. The first thing I want to look at is the income that my portfolio produces. So that's in the form of the dividends that I get, the quarterly dividend checks. And this year was another stellar year. This was probably one of the best years I have seen for dividend increases in the last decade or more. Part of that is the tax reform in the US, the repatriating of a lot of foreign funds by US corporations. A lot of that money went into jacking up substantially the dividends that these companies pay me. So I had pretty much a double-digit dividend growth rate on my US holdings. My Canadian holdings did well as well. Pretty much all of them, from Royal Bank, TELUS, BCE, insurance companies that I own, had a dividend increase. And those are the kind of companies that I like to own. Companies that not only pay you a dividend, but increase that dividend every year. And just on a side note here, I want people, I've talked about it in my book, this is the thing that will help you kind of stay the course when you get markets like we've had the last couple of months. And the S&P 500 has dropped 15%, and the Dow has dropped 15%, and the TSX is at multi-year lows. One of the best ways to stay the course is to buy companies that pay you a solid dividend and just hold them. Don't focus on the price so much. Focus on the income that that portfolio is going to produce, because the price over time will take care of itself. Believe me. You buy BCE or you buy Apple or Johnson & Johnson or Royal Bank or TD Bank and keep it for 10 or 15 years. It's not going to go up every year. You're going to have some down years. But over 10 or 15 years, you're going to get some nice capital gain. But the important thing is they're going to continue to pay you a quarterly dividend check. And every year, they're going to raise that dividend. So just to give you an example, I bought some Royal Bank from my TFSA here a couple of days ago. Royal Bank right now is yielding 4.3%. I bought about $4,000 of Royal Bank shares. That's going to give me about $175, let's call it, in annual dividend income. So the way I look at it is I bought those $4,000 worth of Royal Bank. That's going to buy me 1 day of permanent financial freedom. It's going to give me $175 this year in dividends. Next year, they'll probably raise that 5 or 6%, so they're going to pay me $182. The year after that, it'll probably be $189 or $190 without touching or adding any more stock. So look at it that way. When you buy $4,000 worth of Royal Bank, you just bought 1 day of financial freedom. You'll never have to work again in your life. You got 364 more days to go. Buy another $5,000 worth of TD, you just knocked off another day of financial freedom. That's the way I've always looked at it. You build a $1 million portfolio that's yielding 4%, you're going to collect $40,000 annually in dividend payments. And those dividend payments are going to continue to go up. My dividend growth rate this year, as I say, was close to double digit. Inflation is only running at 3%. You basically got a bulletproof portfolio here that you don't have to touch the principal, live off the dividends, and that dividend stream will keep increasing every single year unabated. Some of my stock, like Apple and Celgene and some of these other companies that I own, or Home Depot, Costco, are well into double-digit dividend increases. So that's the first thing I look at, is the income. The income that my portfolio is producing, and it was another stellar year. Now, as far as the value of my portfolio goes, hey, there's good years and bad years. This year, 2018, was a year that I'd like to put behind me. It was funny because my portfolio was doing fantastic up until about mid-October. I was up about 8%, not including the dividend. So I was up well into double digits. And then late October hit, and of course we all know what's happened here. Market has gone into a correction mode, and I'm down about 6 figures in my portfolio for 2018 if I had to value it. Although as I speak now, I'm into January, we've gotten back a fair bit of that. Dow's up about 2,000 points as I speak, so I've already picked up and reclaimed a lot of that, and my portfolio is back on a growth mode again. But this is what the stock market does. Mr. Market is a bit bipolar. One day he's up, next day he's down. One day everything's looking rosy. Next day trade talks aren't going anywhere. Pipelines can't get built. New taxes, government shutdown, and the Dow goes down 600 points. This is what you sign up for when you want to get superior long-term returns, which you will get. If you don't, and if you can't take the volatility, you're going to be stuck with interest-bearing vehicles that are guaranteed to lose money. Remember that. You buy a GIC today at 2%, you're guaranteed to lose money on that GIC because inflation's running at 2.5 or 3, and you're getting taxed on the interest at your full marginal tax rate. Unlike your TFSA or your RRSP that's growing tax-free, or even your Canadian stocks in your cash account, which are taxed at a very low rate, a fraction of what your income tax rate, general income tax rate is. I've done many blogs on it. So my portfolio this year was down. It got beaten up. Did I lose any sleep over it? Not at all. I've gotten a lot of it back already. As a matter of fact, I was buying over the Christmas holidays, and I'll probably continue to buy into the new year here. There's some stocks that are on sale right now. I look at it as a buying opportunity. I'm still in my accumulation stages. I'm far from getting ready to retire yet. So I'm picking up these shares at what I feel to be, good value. Next things I'll kind of move on to is just a few other minor little things that I look at for my year. I have many other multiple, very small revenue sources. So one is my book sales, the sales through Amazon for Along for the Ride. And again, 2018 was another record year for book sales. Every year for the last 3 years, I've sold more books, more copies of Along for the Ride. And that's pretty cool because my publisher in South Carolina actually emailed me and said, Owen, you're doing quite well with your book. I'm looking at your stats with Amazon, and actually your book sales have been going up, which is apparently quite unusual. Most books kind of hit, they sell for the first 6 or 12 months, and then the sales drop off. With me, my sales continue to get stronger and stronger every year. So thank you to everyone who's bought my book, reviewed my book on Amazon, and has told me they enjoy it. They've read it multiple times. They've gifted it to people. Thank you. Now, the book sales, I'm not going to get rich off them. It's not enough to live on, but it is another revenue source, just like my YouTube channel is. Every year, the revenues that I get from my YouTube channel and the advertisements that are running on my YouTube channel go up every year. So again, it was another stellar year there. I've also got other smaller ventures that I invest in, seed money, various startups and things like that. Nothing huge. It's kind of a mad money thing for me. But the point I want to make here is if you've read my book and if you follow me on Twitter, I'll post things on the traits of successful people, of multimillionaires. What separates them from the people that are kind of living paycheck to paycheck? And one of the big things that all of these multimillionaires and successful people have in common is they have multiple revenue streams. I have always had, since I was a teenager, I've had multiple jobs and multiple revenue streams. Same thing today. The main revenue stream for me is my working income as a realtor. But I also have substantial income from my rental portfolio. I have substantial income from my stock portfolio and the dividends I receive. I've got my book income, my YouTube income, and other areas. I probably have 8 or 9 sources of revenue. And that's something that I want you guys to focus in on as well. Try and get multiple streams of revenue. This is what will set you apart from the 9-to-5er. Even if you are working 9 to 5, try and get a side hustle. Try and get a side job. There's millions of them out there, especially with this day and age of the internet and technology and eBay and everything else. I've got so many clients now that I'm working with in Vancouver, young people that all have multiple revenue sources, and that's always good to see. That is a common trait that almost all multimillionaires have. They've got a few big sources of income, but then they've got multiple smaller ones that they all add up. Final thing I kind of look at, just a few other minor little things. One of them being, my workouts, my sleep. I track that on a Fitbit and an Apple watch that I've got. So I'm always trying to get a little better with my fitness. It's getting tough at my age. I'm just trying to keep it all together for my age. But I want to make sure that I'm eating right, I'm sleeping. One of the nice things to the stage that I'm in is that I can hire a nutritionist and a private trainer, which I've got, which helps me be more productive. Gives me more energy, gives me more working hours. You'll find that is a common trait with a lot of successful CEOs and, of course, a lot of pro athletes. Many of these pro athletes now, of course, have personal trainers and nutritionists, but I'm finding it more and more with these Fortune 500 CEOs. Many of these guys now have trainers and nutritionists because they realized a long time ago, if they're not healthy, if they're not feeling good, feeling strong, sleeping right, then their productivity and the way they think is greatly diminished. So those are kind of the last few things that I'll kind of track. Where am I with my body weight? Am I getting enough sleep? How do I feel as far as my strength and my training? And generally those things are always pretty good for me because, again, it's things that I can control. Those are in my wheelhouse. I can control when I get up, how hard I work out, what I eat during the day. The things that are in your control, you should never fall short with because it's up to you. If it is to be, it's up to me, which is a phrase that I learned many years ago, and you should take heart in it as well. So that's kind of how I review my year. I know I've kind of gone on a bit long here. Again, I tell people that don't focus on price, whether that's the price of your condo, whether that's that you live in, or the price of one of your rental units. Focus in on the revenue or the dividend or the rent checks you're collecting. As long as you've got a tenant in there, you're doing what you're supposed to, and the price will take care of itself down the road. Trust me. Your stock portfolio, the same thing. Focus on what your portfolio is generating. There's going to be good years where your portfolio is up 200K, and there's going to be years when it's down 150K. For the most part, though, probably 6 or 7 years out of 10, it's going to be up. You're going to get some down years, but focus on what that portfolio is generating. That's what I do. Is my dividend increases coming along as planned? Am I earning more this year in dividends than I did last year? Those are the metrics I focus on, and I'll let the price take care of itself, which it always will. And then, of course, focus on your career, getting better in your career, trying to make a little more money, going to seminars, reading books, getting more productive, using technology, whatever it is to give you a little bit better edge. Staying in shape, eating right, and sleeping right will give you that edge as well. So that's kind of how I work. I hope you guys maybe learned a few things with it. These are all things, like I said, that I've either learned or stolen or read in books from other successful people. So they're not unique to me. Happy New Year to everyone. Thank you for subscribing to my YouTube channel in 2018 and watching my videos. Looking forward to another great year. I'll see you next week.